Hi, Rep VanScoter here, owner of VanScoter Insurance Agency. I'll tell you what, you string together a couple nice days here. We changed the clocks ahead over the weekend. I'm ready to put winter behind me, and I'm ready to get ready for spring. Now I'm not talking about spring cleaning here. That's great and all. What I'm referring to is people pulling their boats out of storage and getting ready to drop them in the water. Now I drive over the Irondequoit Bay Bridge a few times a week, and I love seeing the fact that some weeks, one week I'll drive by and there'll be ice fishing huts out on the water, and then the next week I'll drive by and there'll be boats out on the water because the water's clear of ice. So it's always fun to see that. Now if you're one of the people who are pulling your boat out of storage, I'd recommend having your insurance policy reviewed before you do that. There's a couple coverages that I recommend to all my clients. The first is how you actually insure your boat. There's two ways you can do it. There's agreed value, which is the way that I recommend for my clients too. Basically, we choose the amount that you want to insure your boat for. So if you have a $20,000 boat, we're going to say, hey, we're going to insure this boat for $20,000. If 3 years down the road you end up having a total loss, you don't have to worry about your boat being depreciated. You're going to get that $20,000, so you'll be able to go out and buy another $20,000 boat, which will most likely be a newer model, so it'll be equivalent to what you had. So that is kind of what I recommend. When you have that agreed value policy, also if you have a partial loss, generally they will also replace your equipment on a new for old or old for new basis. So they're going to take that old stuff that was on your boat and they're going to replace it with new stuff. So you don't have to same thing. You don't have to worry about them depreciating and say, oh, this equipment's old, this motor's old, so we're going to depreciate it. You have to get a lesser value of a motor or any other sort of replacement equipment that you might have on your boat. So the other way to insure it is what they call an actual cash value basis. You might see it listed as ACV value. And basically what that just means is they're going to depreciate it. They're going to either give you market value for your boat, or if it's a partial loss, they'll depreciate the item. So the event of a claim, you're going to have to come out with a lot more money out of your pocket to get yourself back on the water. So the ACV policy is obviously a lot cheaper up front. I guess I wouldn't say a lot cheaper, but it's less expensive up front. But in the end, it's going to cost you a lot more if you have to use it and you want to get back on the water. So that's why I recommend the agreed value. The second thing that I recommend for my client is on-water towing. Now, if you've ever been on a boat and ever had to be towed, you know that a towing bill can cost you hundreds of dollars. Now, we're not talking $100. We're probably talking to the $300 to $500 range for on-water towing. So it's very expensive to be towed on water. So we can add on-water towing to your policy for a fraction of the cost that it costs to actually have your boat towed. So that's something you want to look at as well. So those are the two things that I recommend to all my clients who are looking at a boat policy: agreed value and towing. Those are the two things I like to see on there. So if you would like us to review your boat policy at no charge to you, free, no obligation, we're not going to push anything you don't need, give our agency a call at the number below. We'd be happy to help you out.